Thanks for giving me the session after lunch. It's always great when everyone's all relaxed and good for it. Yeah, it's been very interesting following some of the talks today and going through how much technology makes a difference in the business and in different companies, and how we drive that as creating value. From a TransUnion perspective, I mean, clearly our ethos is around using data and using data for good in terms of changing the world that we live in and making a difference in that perspective. It's quite a wide variety of pieces that we could go through generally. So today I really picked one specific element of that landscape within data, and a way in which data can be used specifically to do things fundamentally different, and keeping up with, I suppose, the theme of the conference around having data drive everything. I think one of the trends that we all feel, and I think, like Lee said when we started the whole session with his introductory remarks, which related to that we lost a little bit of control over the consumer during COVID. And a lot of that has to do with this ongoing drive of hyper-personalization of I want what I want. I want it to be talking to me specifically. I want it to be giving me what I need when I want it. And so I think what the data piece that I'll talk through today will really be around that as a theme, as a backdrop to the theme. I'm just going to share the deck, and then hopefully we can work through that as a guideline. So effectively, the discussion really is around looking at this age of the individual. So it's all about hyper-personalization and how do we drive that. So the key themes that I'd really like to look at today is just how is there the change of the nature of data use, specifically around how it's become very, very detailed, very specific, and across the usage of the value chain, from the beginning of trying to find your customers all the way to the end of dealing with claims or dealing with collections. The second part really looks around segmentation and how we've gone from the days of trying to identify the types of customer we want to get to these days where it's very specific about not just a customer, but a very specific segments and micro segments of customers. And then how we change the data from identifying people into actively driving the targeting and doing activity. So it's driving data to activity and action, right? Which is the third bullet, which is really around once you have the data and you understand kind of what you're going to be doing, it's how do you make it happen? And then as things change quite dynamically, to make sure that you adapt it and change it quite rapidly. Which brings us to the instant gratification era that we're in. So it's not just hyper-personalization. It's not just, it's got to be perfectly fit for me. It now is around, I want it perfectly fit for me, but I want it now. And how do businesses use data to then target you, specifically get products and services that are related to you, give it to you almost instantaneously, and then measure whether you're happy with what you got, and how do we change that as fast as possible if it's not hitting the mark directly. And then lastly, links to that is the speed of adaptation. So that's really the key themes that I'd like to follow through today. On that, there's some context. I think it's worthwhile to see what the context within the insurance market is currently and how these themes relate to it. So I mean, we're all experiencing the idea of a stagnant market within insurance. The days of you kind of talk to 5 people and you get someone who's willing to look at insurance and take up a policy. These days, the market's fairly stagnant. So if you're getting a customer from somewhere, it's probably that someone's lost it. And overall, if we look at the short-term market generically, inquiries have been fairly on a downward trend. New policy registrations have been on a downward trend. Something similar within life, not quite similar within funeral, but for different reasons. And so we really need to start looking at, it is fairly stagnant as a market right now. It's most likely to remain so until the second half of 2024, pending some relief on interest rates that will change a little bit the affordability dynamics for customers. So as we're now focusing on this market that is fairly stagnant, we're then looking at retaining our customers. So it was always a view of saying, I have my book and I'm kind of focusing on my book, but we're all seeing people leave and move. So what we really need to do is to be a lot smarter around how we retain customers. And part of that is not just keeping the customers that I have, but actually getting an understanding of who are the good customers that are experiencing financial distress, making sure that we keep those because they might in the short term be going through some distress. But if we lose them and we don't look after them, then when they change their environment, well, then it's very hard to get them back again. So it's really making that distinction between good customers and bad customers, or customers that you're willing to walk out the door. And that really relates to how do I use data to specifically segment my current book and proactively use that to do specific actions around individuals. So it's not about saying these are all the people that are in arrears and therefore we're going to let them go if they don't pay their premiums or we lapse their premiums. It's identifying sub-segments within that to say, well, these are good customers, but they're technically late or there's specific issues around their affordability environment, and therefore we can do specific things to keep them whilst we solve, they solve their financial lives. The third element within the context is really around this balance of profitability with market share, right? So you can go after share, you can drop the prices, find specific niches, grow a business. But if you're not doing that in a specific way where you're actually having value propositions, especially in the market where we are now, where your customers are walking out the door and it's a hard environment, we need to make this balance. And so we need to grow, but we need to be able to identify which segments are we growing, where are we finding the people that are worthwhile going after, and being very specific around that. And so on top of the fact that the market overall is a little bit under distress, there's also more competition. So we're getting competition from within the industry, short-term insurers getting into life insurers that have kind of been into short-term, non-insurers getting into the market space, especially around funeral and life. So it's becoming a very competitive environment, and then one or two new fintechs, following the discussion over the last 2 days, a lot more new fintechs playing in the market space and crowding the players and making the market even more competitive. And then the last point, which I think is very prudent around this, is the point of action always beats reaction. And it's a military axiom, but it really relates to, do you wait until your customer tells you something's wrong? So if it's at renewal time, is it when they're phoning in, they're asking for cancellations or renewal on their premiums? If you wait for that event to happen, it's already too late. If you knew the customer was in distress and was going to go through that environment, you could have addressed the issues with customers proactively, which then prohibits them from shopping around, and it increases your customer experience. So the more you can find reasons to have action with customers, the right customers at the right time, the better your success rates will be, because then you're acting proactively as opposed to reacting to customer events. So I hope that creates a bit of a context for the discussion. So just to put another underlining point of this increased competition and higher levels of the stagnation of the market with higher levels of competition, if one just looks at some independent stats on Truecaller, South Africa is one of the highest spammed countries in the world, and the insurance companies is one of the biggest contributors to that in the marketplace. Right? This scramble to find customers, talk to customers, identify customers, and going through that environment. And then the flip side of that is on the Nielsen's indication of market spend in 2023. It is quite telling that an insurers are 3 of the top 6 in the market at the moment, and so we're spending a significant amount of money in a stagnant environment with high competition to try and keep and retain our customers. And maybe data could help us do that more targeted, and we can get much higher focused view of where our growth sits than necessarily above the line. So data generally, so we talk about trends, where do we use it? I think from the last couple of days and presentations and in every business we walk into these days, it's clear that data is everywhere. It's not just something that you're doing in marketing. It's not just, it's literally in every piece of the value chain, from understanding your customer experience to product development to assessment of your markets, getting insights, doing it. So it's not only is every segment using it within a business, but more and more we're seeing how businesses are integrating these flows. So you're looking at your data up front in terms of segmentation, but using the same data throughout the value chain to unearth additional value areas and areas that we can either increase discussions with customers or reasons to talk to our customers, but also to engage proactively when things are not necessarily great. So being proactive to keep our good customers and talk to them. So data is now everywhere. So I think the key to it, and I mean, over the last 2 days, you've seen much of this, is that data lies as the foundation of finding these opportunities, right? How do we get them? How do we identify them? And there's so much data out there that it's possible, but the real difficulty lies in building the solution, right? How do I access a solution? And how do I access the data in a way that we could use that? And obviously, as TransUnion, with one of the largest databases in South Africa and quite comprehensive databases, and it's part of what I'll talk about today, how do you access that and how do you get value for driving into this data lake and building these, unlocking these opportunities? So I'm going to use a very specific example, and I thought I would do it as a walkthrough example, I suppose, is we start with the executive saying, I would like to find my ideal customer. If I could go and identify, segment, and then identify where this customer is, that really helps me with regards to where I'm going, right? So we start with a simple segmentation exercise and really looking for customers between the age of 30 and 40. It'd be great if they have families. If they have a car, that's fantastic, because then we can start looking at the short-term insurance market. If they own a house, that's even better, because we can start looking at a comprehensive or content insurance or credit life for the house. And if they have kids, well, that's even better, because then we can start looking at full service elements like funeral cover, life cover, retirement annuities, investments. So if we started with that as here's the segment that we want, and we use data and we feed it into the system, we kind of get to this, right? So this is the starting point of where we all end, is this persona of our ideal customer. Look, something like this with all these variables around it, and then we go and say, where do we find this person? These are the people, this person and people like them are exactly who we're looking for. We feed it in the system and boom, here's the answer. Almost 70% of people in the segment that lives here complies with all those criteria. So if they live in this area, we've filtered it down to here. And not just this segment, we've identified that there are 2,754 market segments, very specifically geographically located, that 70% have a match rate to our criteria of our unique customer. So this is where they are. So that's fantastic. We're halfway there. And we do this by effectively having created one of the leading data-rich profiles in South Africa by overlaying credit data and spatial data. And then the spatial data has all addresses, property valuations, some of the issues around census information, climate, weather, and so forth on a spatial view. And we overlay that on a very detailed aggregated level on credit data. So now we're starting to say, all those criteria identified for our ideal customer, we can map that geographically because we have this massive database that is complex and has significant layers within it. So it's about saying, for all of you out there listening to this, what you should be doing in your mind right now is identifying all the criteria that would make your ideal customer. So if I'm looking for everyone in Pretoria that links to my ideal customer, what are all the criteria I would want? And we can tell you exactly where those people are. That's what this does. And if you look at this bottom piece over here, the real crux of the solution lies in not just taking the data that we have, which is vast, but overlaying that with your specific data. So we can then integrate the data from every customer, every environment that you sit with, overlay that into the database, which then gives you a view of me. It then gives you a view of the market overall, which gives you market opportunities, and it tells you exactly where everyone is. And now you start getting the view of how many different layers or filters can I put on the data to identify where my ideal customers are. And of course, what this leads to is this, is that we're no longer looking for the ideal customer. We're looking for the ideal customer because, yes, that's where we get most of our revenue. That's where we're going to drive strategically, and we want to capture that person. But at the same time, we can identify as many other personas as we possibly can with the idea that fit within our best use case for our solutions or our value proposition for our customer, and then start looking at growth opportunities for our key areas, but also for every other growth segment that we could possibly think of on top of this. And so it really comes to me around this concept of, it's not how do we grow or can we grow or how do we protect what we have. It's the idea of triaging the growth. So there are now countless segments of growth out there, largely defined only by your imagination of how you can apply your service or your solution set, and identifying who are the people that would most benefit from that, and then start finding pockets of that growth within the country overall. And then it's really not so much about can I grow, but where do I put the resources that I have to grow most effectively? So it's really, now we're back to triage the growth, not can I grow. So let's go back to our story a little bit. So if we took our story and we said, well, this is where 70% of our key customer segments lie, and we start overlaying some additional information. So let's give you a practical view of how this would work. So the first thing is, if we know they're all here, depending on the segments that I have in my distribution model, maybe I have pop-ups at the mall. I know everyone in this environment is going to go to that mall, or maybe one or two of the smaller malls around that. And those are areas where I could either set up pop-up stores, set up a store, have a shop front, if it's insurance environments, it could be that's where my broker should be. That should be where my panel beaters. That's the service environment that looks after this this area, which we've already said links 70% of what your key criteria were when we started the question about where are my customers. We also look at where they're going to travel. So you can see at the top there, this would be a fantastic place to put a billboard. Not every other place, that place, because most of these people have to drive through that area to exit this environment, which is great. So now I not only know where a huge chunk of my customer base sits in this particular segment, but I can also identify where should I be marketing to them. And on top of the above the line marketing, maybe it is the geolocation data click-through marketing that should be linking in this area specifically. And of course, for those who work through the school environments or work through the networking environment, there's one school, there's another one in this book, in this area as it stands, there's a couple of primary schools too. And that gives you some kind of a view of how do I specifically target the changed data and take the data into action, depending on my distribution. So this is a good first view. It's great. I was in the broker environment and they told me, this is where you should be going. This is fantastic. I've already got a target-rich environment. But let's take an extra couple of filters to this. So if we have all this environment, maybe I can then start asking myself these questions. So what is the current penetration we have there? Because I really don't want to go to an area because it says that we have a lot of customers that are potentially in that environment, but actually we already have most of them there. So if we overlay your data into this, we can get a view of how many customers qualify for you, and how many of your customers already sit in this environment. Well, that's great, because now you have market potential as a view. And now you can start saying, well, of the people that are there, whilst they hit the high level views, 30 to 40s, have a house, drive a car, maybe married, have kids. The question is, if I'm really doing a service related to investments, it really makes a good environment for me if the people in that environment have free cash flows, or if they are in good credit standing. Well, if they don't, well, then this is not the area for me. So this is the last place I want to go if everyone there is in financial distress. We can start looking at things. Are they improving their credit balances? Are they decreasing their credit balances? Do they currently have short-term insurance? Don't they currently have short-term insurance? And let's go and have a look at what that would look like. So here we go. This is everyone who has short-term insurance in that environment that we already said. Most of the people should be having cars. And because lots of them have cars, there's a fair segment here that has already got penetration about insurance. So that's fantastic. So if I'm in short-term insurance, probably home content insurance, comprehensive insurance, this is a good space for me to start looking at. Well, if we overlay to that the current environment of whether you have, what is your current market share as a customer, we can then start looking and say, well, if you look there, all the little blue dots there represent your current customer base environment. So we can start getting you a view that in this segment, at the moment, the market share is X, and you have 10% of this market. Now, that's a great market to go to. Huge number of customers that are actually aligned with where you want. You have 10% of it, meaning 90% of the market is really up for the grabs here. So let's take that another segment further. So let's put another filter to it. So if we said, these are the people with my current share, we now get a view of other criteria that we've put in here. So if we said, how is their affordability? Can we start looking at credit criteria? And then we start getting, of all the people that link to those filters, how many people are then available? So that gives you all the green dots. So now on this one slide within this environment, which is very specific, you're starting to get a view of who has what you want or what you're wanting to sell them. How many of them are yours, which is the blue dots over here, and how many people would you actually want to start focusing on given your exclusion criteria? Those are all the green dots. This is starting to look good. So now I have an idea of where to go, who to go to, and you get areas like this where you say, well, if we go and target here specifically, we already have quite a few customers here. There's quite a lot of green dots there. If we are very successful in this environment, the kinds of issues you start asking yourself is concentration risk. Now, in this particular session that we're talking about here, if this was home content insurance or if it was home insurance, comprehensive insurance, the question is, if you are highly successful in concentration risk, is that a good or a bad thing for you? And are there other criteria that I could now filter into this that will actually change my decision of where I'm going? So let's take flood risk. Now, in this particular case, that there is a little river, a little strumpy running through here. But if we start looking at historic data on flooding within this area, we start realizing that whilst this area here at the bottom looked very promising overall, the moment you start looking at flood risk on top of the other criteria we've already mentioned, well, now all of a sudden this area is probably not so great. There's flood risk is one area when we're talking about this kind of thing, but some of the data that's quite groundbreaking, funny pun, in this type of analysis right now is we've also started looking right now around flooding or ponding risks. So this would be areas, for instance, like in KwaZulu-Natal, where you get sloped areas where there's persistent rain over time that leads to the ground getting extremely saturated, and the weight of the water starts pushing against retaining walls, and then you start getting either mudslides or ponding risks. So whilst this guy here, for instance, well, that wouldn't be a great area for flooding, but this looks like it's okay. But if this area is on a slope and there's persistent rain in this environment, some of these houses might be at risk of flooding or ponding, not necessarily this water damage. So there's more layers of flooding through here. So now we have an idea of, okay, in this area, maybe these two segments, depending on the service and the offering that I'm doing, maybe that's not on my number one list. Let's add another filter to it. How about fire? So fire risk is another environment. So if we start looking at the bottom here, we start seeing a segment that has significant fire risk, and that'll either be because of dry felt, historic environments around fire, propensity of people that have LAPAs or flammable areas within their space. So the question here is, if I were to go and look at this house here, for instance, and you do the application for the home, and you ask the person, do you have a LAPA? And the answer is no. Well, then your current risk is, well, fire risk is fairly limited. The reality is, if 3 of the houses surrounding you have LAPAs, the risk of fire for you is quite considerably, because if one of those LAPAs go up, your house, whether it has LAPA or not, is going up with them. And so we can start looking at fire risk at much broader grouping areas into this layered segment. So not to belabor the point, because I'm thinking you're starting to get the view of how many layers can I add to this to get to segments that are very specific and micro for my business. So if we take crime, overlay fire, crime, flooding, now you start getting different views. None of this was a problem for flooding, but when we start talking about open fields and actual crime data, that area there is not great for home content insurance, and neither is this one over here, as an example. If we start looking at severe property changes over time, am I doing a huge amount of analysis and investment into this area? I have set up a brokerage, I'm talking to everyone in this environment, but what I've failed to realize is that over the last 10 to 15 years, there's been a significant reduction in property prices, which means the market segment that I'm going after, which might be investments, RAs, in this particular environment, this is a declining market. It has lower and lower returns, and unless I adapt the type of service environment that I'm providing here, over time, I will see less and less customers, less and less success in this environment. And if I didn't see this type of data, I'm investing in an area that is declining. Not great. So obviously, the number of layers that you can build over this is quite, I want to say unlimited, but it is an extensive amount of sub-segmentation that you could start doing. And it really comes down to how detailed can you get with regards to identifying your particular market segments and the growth areas that you're looking after, whether that be current or future or planned future growth areas, products or solutions. Of course, if we have this overlaid environment and we then take an extensive overlaid POPIA compliant database on top of that as well, it now becomes not just an area view, but it now becomes a marketing segment-based view. So now we can start talking about, in the areas, the 2,057 areas that we spoke about, as a first pass of how do you drive and get some POCs or get some real wins on the board, let's target the individuals that have already consented to marketing in those areas, and then you can get a whole range of benefits that we're talking through here. So identify the area, talk to the individuals, get real detail around individuals, and get the growth working. And then, whilst I've taken through this, maybe as a little pause, because I mean, it's visual, so it should be quite easy to kind of see how you're stacking this in terms of the filters. We focus very much in this example as an onboarding process or as a market segmentation process at the beginning of the value chain. But there's very similar data that is available for you or for any business, but you start looking at data availability around throughout the value chain, right? So if you can now start looking at not just the onboarding, but your current books, how we've onboarded all these customers, we have them on board, and now it's really around saying, what are the ongoing customer insights that we can have that can lead to action? So if we define the data, what actions can we relate from that data? how do we do it proactively so that it is no longer an issue of waiting for customers to ask us, but we can actually tailor discussions and offerings or changes in environments for customers proactively. So the kinds of things that we start looking at here, if you have the right consents in place and you're looking at book management within your customer base, and you start picking up a view of a segment of your book has paid off some personal loans. So if people have paid off personal loans, as we've all been, where you make that last payment and you realize from next month I have an extra 3,500 Rand in my bank account because the personal loan, the car loan, all of those hire purchase views are now done. By knowing that within your book, you can create the value with the customer of saying disposable income's available. This is the perfect time to start talking about upping your RAs, maximizing your investment planning. This is the perfect time. The other side is also, of course, if there's excessive loans or judgments within an area, maybe that's not the right time to be talking to those customers about investments. And maybe when you start looking at people with judgments, this is unfortunate in the South African environment, the linkage between judgments and claims propensity is quite upward. And therefore, maybe when you start getting into areas with significant judgments within your book, you can start flagging those for an additional question or two when claim stage does come around. Now, I'm not going to go through each of these. I'm sure that most of you have had a time to have a look through them. But fundamentally, the point is the data is available upfront. It is segmentable to a very specific degree. And if you start looking at it onboarding all the way through to book management, collections, and claims, you'll realize that there are environments like TransUnion that have significant databases that could help you to go along with this mass personalization activity right now, and how to drive measurable value from the activities and actions that you drive. So overall, just as in closing, I suppose, the real issue for me is really four main takeaways. Firstly, if you have the right data and you have the right partner, then all things become possible. Secondly, it's no longer a question of can I grow, it's where do I grow first? And if you use the data right, it is definitely about how do I plan and triage my investment to get the best growth, not how to just protect. Lastly is when you start looking like data, and I'm sure all of you have sat once or twice with a spreadsheet or a presentation, and as you start unpacking the data, you start realizing things you never knew, right? There's the Freakonomics kind of books that really talked around the answers are easy, it's the questions that are difficult. So how do I define the right question? And if I don't even know what the trend is, how am I asking those questions? Well, this type of data set which helps you to identify where everyone is, looking at specific scenarios, brings up questions for you of why am I not there? Why is that not an area I'm looking for? In the area that I have traditionally been focused on, am I doing that effectively, yes or no? And then lastly, dynamic data equals dynamic action. I think the days are gone where you get your data, you analyze it, you get a strategy, and there you go for the next 12 months. The reality is people interact with the world these days every day. Data is dynamic and they make decisions every day. So if you miss the decision point when someone's taking that decision, the chances are you've missed the point for some time. So you have to be at the right place at the right time with the right questions so that you can find the right customer. And with that, I thank you. I don't know if there are any particular questions or comments that you'd like me to respond to, maybe.
Thank you very much, Schalk. That was very, very interesting. There aren't specific questions from the audience. If anybody has a question, please pop it into the question and answer or into the chat. Maybe just from my side to ask a question, how accessible is data and services like that to businesses? Where do you sort of pitch that if you're a broker, medium size, etc., for instance? Do you have access to some of that data? how would you go about that?
Yeah, so the data sets, I mean, there are some of the data sets are limited with regards to accessibility, with regards to consent issues. I mean, we do live in a South African environment where consent is important with regards to customers. But within the data set that I just showed you, for instance, there's significant amount of that data which is aggregated at levels that are that become popular compliant for individuals, whether from a data accessibility makes that available. There's public domain data in there that if you put it in a spatial data, you get the value out of the data anyway. So I think there is availability of data here from the startup company that needs to spend the money very specifically in terms of where do I put my money for growth, all the way through to large corporates that are our customers currently, that specifically can spend their way in finding very specific information across the value chain. So I think it is accessible to everyone. I mean, TransUnion has three main delivery channels when it comes to data. It's API integrations, which helps for medium to large size businesses. There's the TransUnion Direct Portal, which is a web-based service where you can access a huge amount of data without any integration. And then there's batch-related files for less time-sensitive data, which is also a very affordable method to access some data. So it caters, and we cater for across the spectrum.